Hey everybody, today is going to be a great video, more of an educational video about growth stocks versus value stocks. Now, I already did a couple of videos on those, and this is a little bit of a follow-up of how growth stocks are doing compared to value stocks. If you're willing to take a little bit of time to gain a little bit more education on how to manage your portfolio, you sit right there. Glenn Tompkins here, Senior Instructor here at VectorVest. So this video is not about any flashy stocks that are making big moves, that are dollar stocks, that could explode up to anything. Today is more of a take a step back. Let's look at value stocks compared to growth stocks and get a better understanding of what kind of stocks they are and which ones are right for you. I'm going to tell you that in the current market situation that more people are moving over to value stocks than growth stocks, and I'll explain that why as we go along. If you're new to the channel, please subscribe to the channel. Don't forget to hit the bell icon. We do have a streaming channel as well. If you look in our YouTube page, you'll find that. Subscribe to that one as well because that's where we have our live streams. Don't forget to hit the like button. See, the algorithms in YouTube, the more likes you get, the more they share this content across their platform. If you're wanting to get more people involved in understanding what we do here at VectorVest, then folks, let's smash that like button. All right, let's get into it. I have no news stories for today. Okay? There's no news stories for today. We're going to go into the stocks that I looked back in the latter part of March as far as my videos for growth stocks and value stocks. So in the software, I did the video back on the week of 3/29 of 2021 for growth stocks and then also for value stocks. So I wanted to start off here because since that time, I wanted to see which ones are moving the fastest. Remember, I'm saying that right now the market is moving more over to value stocks than growth stocks, but that doesn't mean you can't get into either one or both of them to bolster up your portfolio. So back here on March 29th, here's the 4 stocks that I gave you. And of course, these were ideas that you could take advantage of. I'm going to do a quick test of these top 4 stocks from that time period. And these are, again, my growth stocks. I've got 2 of them that made money. Wow, Moderna went up 43%. Just think about it. If you heeded the information that we gave on the video then, right now you'd be up 43%. And the other 2 stocks that are down are not down against you tremendously. Notice that we did about 8.99% on the growth of these stocks compared to what we use for the market, the VectorVest composite, only up 5.26%. All right. I also gave you 4 stocks to look at on the value side, and here they are. These are higher dollar stocks, good quality stocks, and let's do a quick test of these. And they went up a little bit more, 10.36%, but look at this. Every single one of them made money. Not 2 out of 4, but all 4 made money, with the biggest winner right now is BlackRock. Now, also notice they weren't huge pops, but they made money nonetheless. And for a value portfolio right now, this is a great opportunity to slowly, methodically grow your portfolio, and all 4 stocks made money. All right, so I wanted to go back then to show you what stocks we gave you then to take a look at and how they perform. So today I'm going to give you 2 more growth stocks and I'm going to give you 2 more value stocks. Now I'm going to do something else real quick. Let's go talk about what the difference is between a growth stock and a value stock. So let's start here. Value or growth stocks, which is better? Now, when we start to talk about growth stocks, stocks are those companies that are considered to have the potential to outperform the overall market. We have an indicator within the VectorVest system that shows you stocks that should outperform the market over the next 1 to 3 years. Value stocks are classified as companies that are currently trading below what they are really worth and thus provide superior return. So those value stocks went up a little less, even though all four of them made money. They went up a little less, but they are more consistent winners, whereas the growth stocks are looking for those stocks that have the pop, that have the exuberance to keep moving higher to grow your portfolio a little faster. But as we looked at the results on those four stocks for the growth side and for the value side, the value side outperformed, not by a lot, but the value side had all four stocks making money. Key takeaways. Growth stocks are expected to outperform the overall market over time because of their future potential. This is key words here, future potential. Value stocks are thought to trade below what they're really worth and thus theoretically provide superior returns. Future potential versus superior return. Now again, doesn't matter which camp you sit in, and actually you can invest in both sides to still grow your portfolio. So, which is better? When it comes to comparing the historical performances of the two respective subsectors of stocks, any results can be seen. Any results that can be seen must be evaluated in terms of time horizon and the amount of volatility and thus risk. So when you're in the growth stocks, you're going to probably see a little bit more volatility or risk, whereas the value stocks are theoretically considered to have a lower level of risk and volatility associated with them because they're usually found among larger, more established companies. Keywords there. All right, so let's take this information and now let's talk about some new stocks for you guys to take a look at. I'm going to go to a new watch list that I created for this presentation called Growth Stocks versus Value Stocks. I'm going to put this now back up to today's date, which is 5/27/2021. Now, the stocks that I have for you on the growth side are going to be EXK and GGB. These are good growth stocks, stocks that have good potential to the upside. Let's analyze them. Looking at Endeavor Silver, now we know that mining is on the run right now, starting to move higher. So this is a good play from the perspective of a growth play. Stock is slightly undervalued. I'm going to call that fairly valued. What else is here? Relative value. This is the indicator that looks at potential, the stock's ability to outperform the AAA corporate bond. We're going to use that bond as the market. And if a stock can outperform a AAA corporate bond, most likely it will consistently outperform the market. So I'm looking at relative value is at 1.41 on a scale between 0 and 2. 1.41 tells me that EXK should outperform that AAA corporate bond by 41% over the next 1 to 3 years. Relative safety at 1, so the risk factor is but the stock is in an uptrend. Relative timing tells me the stock's in an uptrend. The stock pays a dividend, and they grow their dividend at a rate of 29%. From a growth perspective, that's not a bad play. Another one, GGB, also in that same space. Looking at, actually, GGB is in the steel space. Why is that important? Because there is an infrastructure bill out there, and steel and things like that are going to be on the rise. Perception, think about it, upside perception, GGB should move. The stock's price is at $6.39 with a value of $8.06, undervalued. Upside potential with relative value at 1.32, so this stock should outperform the AAA corporate bond by 32% over the next 1 to 3 years. Safety factor. Look at that. Both of the safety factors on my growth stocks are like, so they could assume a little bit more risk. But as long as you're okay with that, this is still a good quality stock that's got upside potential. All of these stocks are buy recommendations. GGB has positive earnings and grow their earnings at a clip of 15% a year. So those are my growth stocks. Now, on my value side, I'm going to look at BlackRock and I'm going to look at Allstate. Let's take a look. Let's take a look at those. BlackRock trading at $8.79, value of $9.37. Notice the first thing you see. These are more expensive, well-founded stocks that have history. All right, and value stocks tend to be those kinds of stocks. Relative value, the stock's upside potential should outperform that AAA corporate bond by 46% over the next 1 to 3 years. Now, this is what sets them differently. This safety, these stocks are safe stocks. They're not unsafe stocks. So BlackRock with a relative safety at 1.46, this is a really good safe stock that tends to meet or exceed its earnings expectations quarter over quarter, year over year. The stock is in an uptrend with relative timing above the value of 1. The stock does have positive earnings, and they grow their earnings at a clip of 20% a year. Allstate trading at 134 with a value of 170. Upside potential, 45%. It should outperform the AAA corporate bond. Look at that safety. Again, on my value stocks, these are very safe stocks. These are kinds of stocks that will grow your portfolio methodically, and they will continue to just grow and grow and grow, whereas the growth stocks are going to give you hopefully a little bit more pop because the perception is there. But if you're looking for slow and steady, value is the way to go. If you're looking to grow your portfolio based on potential, then growth stocks are the way to go. But again, at no point am I telling you that you can't take advantage of both. Now, let's talk about how I found these stocks in the VectorVest software. I'm going to go to the Unisearch tool. For those people who are subscribers to the VectorVest system, here's a search that I created was for the growth stocks less than 10. Why did I look at that? Because growth stocks have the potential to go up. I could find lower dollar stocks that are growth stocks. Remember, the value stocks are more established companies, and those prices will definitely be a little bit higher. So I looked at the price to be greater than $1, average volume to be greater than 250,000 shares. I wanted to make sure that these stocks had liquidity, even though they were lower dollar stocks. That relative value, that upside potential had to be greater than 1 on that scale between 0 and 2. The earnings growth rate had to be greater than 10%. So not only these stocks have high potential, but they have high earnings growth rate, and that's a very powerful indicator. And the price less than 10, my sort was stocks had to have that upside potential, relative value, and CI. CI is the comfort index. It's the stock's ability to withstand long and lengthy price declines. Well, if I'm looking for growth stocks, I not only want that good upside potential, but I want consistency in price movement to the upside, and that's why I'm using that indicator. Now, on the value side, it was tough for me to find value stocks that were really inexpensive. So stocks price had to be less than the value. I wanted undervalued stocks. We can do that very simply in our system. The price had to be greater than $1. Average volume had to be greater than 250,000 shares. Now, these stocks, I wanted dividends. These are value stocks. I wanted a dividend. The dividend had to be greater than $2, and the relative safety had to be above 1. These are consistently safe stocks to be in, and the list was sorted by relative safety. That's how I found the stocks within the software. Now, if you don't have the VectorVest software, if you look down in the description, you can take a 99-cent trial for 30 days and get this kind of information at your fingertips like that. If you are a subscriber, I've now given you the access to look at a couple of different searches that I've built specifically for this video. So with that, folks, I want to say thank you for sticking with me for a little bit of education on the difference between value stocks and growth stocks and where you fit in. You get in where you fit in, and guess what? You can do a combination of the two to make your portfolio go higher. Now, I understand, again, this is not about the flashy stocks and all of that, and I thank you for spending the time with me to learn a little bit more about how to manage the bigger portion of your portfolio, because that's just as important as all the meme stocks, as all of the dollar stocks, and the penny stocks, and all of that stuff. This was more of an education. Don't forget, hit the like button. Give this education to other people out there who are interested in learning how to become better investors in the market. So until the next time, folks, see ya.